In this video, we're going to go over some of the trading opportunities that you had to enter in the market on the micro NASDAQ, the micro ES, gold, crude oil, maybe some of our Forex products for Monday, April the 14th of 2025, guys. It is our trades back here with another video. I want to thank you for joining me. I am a full-time practicing criminal defense attorney. I also do some civil work as well in South Texas. I'm an amateur day trader. I run this channel here called Our Trades. We talk about prop firm trading, stock market investing, and that sort of things. Guys, I'm not a financial advisor. This is not financial advice. Do not trade with funds you cannot afford to lose. Simulated trading can be different from real live market trading in many ways. I am not encouraging you or advising you to purchase or sell any securities or derivatives by the making of this video. Also, guys, I'm an Apex Trader Funding affiliate. If you want to get the best discount on your next Apex Trader Funding evaluation, enter code RTRADES, that's RTRADES, all one word, at checkout, and you can get the best discount that Apex Trader Funding has available. As of the making of this video, I currently trade in a Top Step valuation account, an Apex Trader Funding evaluation account, and a Tradify Funding evaluation account. All right. Okay, guys, with that being said, we're going to go and look through from our 24-hour period on Sunday through the close of stocks on Monday on the ES and see, okay, where were there some opportunities that I could have gotten into the market using Inner Circle Trader or ICT trading principles, guys. So let's get it done. This is assuming that you are entering in on limit orders. That is, you are placing an order in the market and then waiting for the market to come to you. First thing that I want to note on Sunday's trading is that we did open with what's called a new week opening gap. What is a new week opening gap? Simply put, a new week opening gap is when there is a difference between the final tick on Friday and the opening tick on Sunday. That is a new week opening gap. All right. If you take the 25 to 75% or draw that out into quarters, you can oftentimes get entry levels doing that. So on Sunday, our first trade could have come in any point by entering in at the 50% point of the new week opening gap. You then had another opportunity to enter in at the new week opening gap to enter long as the market came in later. So I am showing you that with the brush tool. Again, a limit order at 54.15 would have worked out in this instance. It would have gone slightly against you, but our first trade was right off the bat entering in at 50% of the new week opening gap. Okay. All right. Another trading opportunity as we moved into the Sunday night session, guys. So on Sunday, we had an order block here. An order block is basically where the market kind of changes directions. 50% point of that order block is what ICT calls as a mean threshold. Again, using the 50% point of this red candle, assuming a 15-minute chart, we had an entry point here at the 21:30 or the 21:45 New York local time candle. So that is our next entry on an order block or on the 15-minute rejection block. And that's where the 1900 candle opened at 54.16 evens. All right. As we move on in the market, we're looking for, because the market was generally higher on Sunday, we're going to be looking for where the market was giving you opportunities on pullbacks on longs. Okay, guys, so the next level that opens up to me is the 50% point of this order block. The market did not quite get down there. Looking at this retracement that we had at the 2300 hour candle, I would say, let's see if that's the 25% point. No, not quite. So I'm not sure if I would have gotten in on that pullback. I would have been at the 50% point of this order block. There is potentially, if you're looking at this green candle on the way down and using that as an order block, you could have gotten in there. Our next pullback came in during the London session. And let's see how we could have gotten in on that pullback if that was something that we could have gotten into on the opening of the London session, which opens at 0200. Okay, guys, so if we take the long wick here that we had on the 23.15 candle and we invert it, the 50% point of that would have gotten us into that order block. Our next opportunity was at the 0300 candle. This is during the middle of the London session. We can see that if we had taken a long here at this rejection block, which I'm showing with my cursor here, notice that the market came back down on the 15-minute time frame to the opening of that candle, which was 54.47 evens. That would have also gotten us in for a long trade. Next trade to the long side is either 50% of this order block that we formed on the 0215 candle. That would have gotten you in long, or the 0300, the 50% point of that candle. Okay, 50% point of the 0300 candle. That would have also gotten you in on the 0545 candle. All right, next opportunity to get long was on the pullback that we formed from 0715 to 0800 New York local time. By taking the 50% point of that order block candle, we can see that we would have gotten long right as the market came in to its high side on the 0800 candles. Now that we've talked a little bit about some of the entries that we've had, I want to show you some other things that I noticed dissecting Monday's price action. We had buy side liquidity at 54.74, right above this long wick inefficiency. So notice that the market wanted to come, basically it gapped up and then it traded immediately down, nearly filled in that gap. That put a lot of buy side liquidity above that 54.74 handle, and that's where the market ended up running. All right, our next level of buy side liquidity was at 54.83. The pre-market ran that buy side liquidity before we ended up having a move lower. So a couple of liquidity concepts here. When the market was moving higher, I think it should have been pretty obvious that the market was running on that high that we formed right at the open of trading on Sunday. So again, that's some buy side liquidity if you're watching the screen at 54.74 3/4. More buy side liquidity at 54.83 halves. That should have been in your mind that the market was probably gunning for that. All right, our next entry that we're looking to the long side would have been when the market opened at 0930. The market came down and basically turtle souped, but you can see that there are multiple rejection blocks. So rejection block, rejection block, rejection block, that the market came down and tested immediately. Now, I'm going to be honest with you. I actually took multiple shorts during the regular trading hour session today. And so what I want to do is I want to show you some examples on the 15-minute chart of where you could have taken a short during the regular trading hour session. Okay. So first thing here is that notice that the market came up to this rejection block, very close to it. The first 30-minute candle on the S&P 500 or the ES futures was down. About 7 out of 10 times when that first 30-minute candle is down, the market's going to end down for the day, which really biased me to the short side. And we're back. Okay, really biased me to the short side on the 15-minute chart. So when I was taking a short, guys, I'm going to be honest, there were a couple of levels that I was looking for as we came in short. First, I took the 50% point of the 0915 candle, called that an order block, and took a short at 54.87. That was profitable. And then another short, I think I took at the exact same price at 54.87. That again turned out to be quite profitable. What ended up happening is that the market came in and filled in this new week opening gap. So notice that the market did not fill the new week opening gap on its first try. It only went about halfway down. We filled that new week opening gap pretty much perfectly during the regular trading hour session, which is, sometimes the market just really kind of validates ICT's concepts sometimes. All right, so if we're getting to the short side, one thing I wanted to mention is that we did have a sell side imbalance, buy side inefficiency formed between the 0915 candle and the 0945 candle in the morning session. And if we take the 50% point of that, notice that would have, just taking that trade would have been profitable. Using the candle above it as an order block, that even got you a better entry. All right, on the way down, let's say that you wanted to take a long. So notice that during the regular trading hours, the market basically had a two move macro. We had a down morning session, we had an up afternoon session. Down in the morning, up in the afternoon, except as we came into the close, the last like 45 minutes. All right. Had you gone back to the new week opening gap and taken a trade at the 75% or at the 100% of that new week opening gap fill, you would have immediately gotten triggered long. It would have come down quite a bit and then brought you back into profit. So I actually think I talked about that on my X at some point while that was happening. All right. Next thing that I want to point out to your attention, if you were going long for the afternoon session, is to notice the rejection block here on the 1200 or the lunch hour candle. That close was at 54.06 3/4. If you had gotten long here on the retest of that rejection block pretty quickly, you had an opportunity to get long and ride over a percent or about 70 points higher. So we had a good opportunity in the afternoon session. Either you were playing the new week opening gap or you were playing the rejection block that formed. Either way got you long. Coming into the afternoon session, we obviously had a move higher and then a move back lower. Could you have gotten the short? Well, notice that that is the 50% point of our sell side imbalance or SIBI, sell side imbalance, buy side inefficiency. That would have gotten you in short using that. We also had the mean threshold of a bullish order block here, about the same price within that SIBI or fair value gap. That would have also gotten you short for a profit. Or we got pretty close. I don't know if we got there, but yeah, the 50% point of that long wick would have also been an idea, but the market did not quite get there. You could have also used, although I don't like to typically use long wicked candles for this, but the rejection block of the candle that we formed of the 1045 candle. Notice at the close of that, the market came up and pretty much ticked that before it moved back lower. Okay. As we move into Tuesday's trading, immediately what I want to draw your attention to is that we have sell side liquidity at 53.91. We have buy side liquidity up at 54.79. The way that the market looks right now is that it looks like it's headed down towards the sell side liquidity. So if I had to take a wild guess, I would say that the market wants to get below 53.91 evens, but it may not do that during the overnight session. Okay, guys, so that has been an analysis of some of the entry points that you could have taken using ICT levels. We can see that there was a lot of play on Sunday's overnight session and into Monday's session on the new week opening gap, which is to be expected. You had opportunities in this market to make trades really in both directions. I think that our key concept that you wanted to be aware of in Sunday's overnight session was that very obvious buy side liquidity that we had from the opening overnight candle. That buy side liquidity at 54.74 3/4. That was obviously a very sort of obvious target that the market was going for, and you could have basically gone long overnight. Coming into the regular trading hour session, remember that 7 out of 10 times the market's going to end up in the direction of the first 30 minutes. So probably should have biased you short at least in the morning session when you saw that big opening down candle the first 30 minutes. 7 out of 10 times the market's going to end up in that direction. Okay, guys, it's virtually the same for the NASDAQ. We did have a new week opening gap on the NASDAQ. We had a buy side liquidity up above 19,250 evens that the market just barely turtle souped over. We had a first 30 minutes down in the regular trading hour session on the NASDAQ. And I think, let's see here, using our 50% tool, 50% fib retracement tool. Yeah, so one trade that really would have worked out for you using ICT concepts is taking the sell side imbalance, buy side inefficiency, fair value gap formed between 1045 and 1115. Had you placed a short contract right there, I mean, it just kissed it. Beautiful, beautiful short that you had at 19,086 halves that came in on the NASDAQ. Let me see if that would have also been the case for the order block. I don't think that it got there to the order block. No, that was a half a point off. So you needed to be on the fair value gap and not on the order block. Another PD array that you could have stretched then to use would be the inverted long wick of the 1015 candle. If you inverted that, that landed you in that fair value gap, you could have also used that to get a short. Overall, on the daily time frame, let's take a look at the ES. We do see something of a gap in the chart from that new week opening gap. The market ended up closing slightly down in a small ranged kind of spinning top candle for Monday, pretty indecisive. Coming into Tuesday, I think we're probably going to have a down day, if I'm being honest. Again, our overall trend for the market, broadly speaking, is still down on the daily time frame, with what I have to imagine to be just billions of dollars in sell-side liquidity. So there's going to be interest in the market running that low at 48.32, simply because that was our major low. So you may see a run on that sell-side liquidity below 48.32, really trapping a lot of big money into thinking that that low is safe. You may see a run on that low just to prove that it's not safe, basically to get a lot of liquidity. All right, guys, let's take a look at crude oil and see how crude oil ended up today. Crude oil was largely down, up in the overnight session, a kind of a two-stage macro. Up in the overnight session on Sunday, straight down during the first half of the regular trading hours on Monday. A little bit of a relief rally coming into the afternoon session. Could you have caught the relief rally? I think so. All right. 50% of that order block that we formed on Friday the 11th, that little red candle on the 30-minute chart, taking the halfway point of that, would have gotten you in a perfect entry. Let's go to the 15-minute chart. Again, that order block is still there on the 15-minute chart. Could have gotten you in long with basically a perfect entry. Second entry that we had to get long for the afternoon in crude oil would be the 50% point of the long wick on the noon candle, the 12 o'clock candle. Taking the 50% of that on a limit order long would have also worked out really nicely. One other thing is that notice that there was some pretty obvious buy-side liquidity at 62.16, so the market was definitely running on that high during the Sunday overnight trading, so you did have some opportunities to get long and an idea that there was buy-side sitting above that high at 62.16. So some ideas that crude oil was going to run up in the overnight session. Let's take a brief look at gold. Gold was very choppy, lots of opportunity for back and forth trading during the overnight session. It continues to be choppy. Let's go up to the daily chart on gold. Gold had a red day on Monday, an inside candle. Again, no real reason to believe that gold is going to stop right now. The trend is still clearly higher, but we may not move with as much vigor as we have. So if you're trading gold now, it looks like we might be in a trading range for some time. All right, guys, this has been Our Trades back here with another video. Thank you for joining me. If you enjoy this kind of analysis, breaking down where you could have gotten long or short using ICT concepts, please let me know. Leave a comment, like, and subscribe. Follow me on X and use my affiliate link for Apex Trader funding.